Welcome back to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita Khemka. It's been quite a subdued start to the week. Last week was a good one for the market, given the fact that the Nifty and Sensex both gained in excess of 2% for the week, which was the biggest weekly gain in the last 6 months. But Friday was an off day for the market, for the benchmark, so to say. We saw the markets giving up gains and ending the day in the red on Friday, and today as well. We did try to make some bit of a recovery, but didn't really manage to hold on to that, given the fact that we saw intense selling pressure in the FMCG pack, which kind of dragged the larger indices down as well. A lot of these names from the FMCG basket, like HUL, Britannia, Nestle, Tata Consumer, all of them were among the laggards on the index, which is why we ended the day in the red. Although the Nifty has managed to defend that 24,600 mark on the downside. But contrasting picture when it comes to the broader end of the markets. By the way, both the Nifty mid and small cap indices have rallied for a 12th straight session. So the mid cap index was holding up quite smartly. 0.5% gain coming in for the mid cap index. Even the small cap index ended the day in the green, 0.2% kind of a gain coming in there. If you look at the advanced decline ratio, even Stevens 1:1, that was the Nifty advanced decline, NSE advanced decline, I beg your pardon. But of course, the breadth was tilted in favor of gainers. So yes, the broader end of the markets, the action lies there, and a lot of stock specific action, taking place in the broader universe. But of course, as I mentioned, FMCG under intense selling pressure, 2% cut coming in on the FMCG index, and blame it on the mid-quarter update coming in from Godrej Consumer. That was a surprise update, and it was really an alarming one, given the fact that they have said that the margins could be under pressure in the wake of a slowdown in urban consumption demand. So that, yes, that was the one pocket that was under pressure. Aside of that, you saw some bit of selling pressure in the auto stocks as well. FADA data came out, and it wasn't really very encouraging when it comes to demand and sales for passenger vehicles and commercial vehicles, which is why the auto pack was also under pressure, and so was the pharma pack. Banks, the Nifty Bank Index did try to, get back in the green, but gave up most of the gains, and in fact managed to end just above that 53,400 mark. 100-point cut coming in on the Nifty Bank Index. But what did well was the IT pack, managed to hold out, and so did the realty pack. IT, there was some bit of a news flow towards the end of trade today. HSBC has come out with a quite an upbeat report on IT, wherein they have upgraded stocks like Infosys, Emphasis, Wipro, but they have downgraded stocks like Tech Mahindra, TCS, and Coforge. So yes, Infosys ending the day in the green post this report. And if you look at some of the other movers today, L&T, that was among the top gainers, aside of life insurers like HDFC Life and SBI Life. You also had Wipro. In fact, that emerged as a top gainer by the end of the session, up 2% or so. Some of the metal names were holding fine today, Tata Steel, JSW Steel, and the likes. And among the banking lot, you had Kotak Mahindra Bank managed to buck the trend, and so did HDFC Bank, ended the day in the green. Strength coming in there, 0.7% kind of a gain coming in there. 1870 is where it's at towards the end of the day. Tata Consumer, Hindustan Unilever, Nestle, Britannia, Asian Paints, ITC, these are some of the consumption names today. Tata Consumer, Hindustan Unilever, Nestle, Britannia, Asian Paints, ITC, these are some of the consumption names. Total risk off when it comes to FMCG names today. Tata Motors, among the big laggards, Axis Bank, you had Reliance as well under pressure, Coal India, Grasim. These were some of the other laggards. But from the broader end of the markets, let's point out some of the gainers and losers. CE Info Systems, or Map My India, this is one stock that staged quite a reversal in the last half an hour of trade, given the fact that there was news flow that the company has reversed its decision to make any investment in the new company that was to be formed by the CEO Rohan Verma. Now he had stepped down to form a new company, a B2C company, wherein Mapma India was supposed to take a 10% stake, and there was supposed to be a 35 crore, had the option to invest 35 crore rupees vis-a-vis Visa via uh, uh, con- uh, convertible debentures. But that has been put off, which is why I think we saw the stock stage very good turnaround. In fact, a double digit up move coming in there. Aside of that, some of the other movers that I would want to point out very quickly from the broader end of the markets are the likes of ITI, CET, of course, on the back of an acquisition, Trident, JK Tire, HEG. These are some of the other movers. On the flip side, quite a few losers as well. Syngene, PBR Inox continues its losing streak. Aegis Logistics, Indegene, as well as Marico from the FMCG pack. But on that note, let me bring on board guest for today. Joining me is Nilesh Jain, who's head AVP Derivative and Technical Research at Centrum Broking. Nilesh, great to have you on the show. 2 days of negative close on the index. Although last week's swing high was above that 24,800 mark. Are you sensing some kind of tiredness, some kind of resistance around the levels that we are at the current juncture? And would you expect the Nifty to break out of this range in the coming sessions?
Very good afternoon, Nanta. Absolutely. So, if you see on Friday, Nifty broke its 5 days of winning streak and formed a very small bodied bearish candle. And today, once again, Nifty traded in a very narrow range of almost 100 point. And the good part of today's consolidation was that Nifty managed to close about 24,600, although it's facing a constant resistance at 24,700 mark for the third consecutive session. So, overall, looking at the today's action where we have seen broader markets outperforming the benchmark indices, where the Nifty mid cap and small cap, these indices have continued their gains for the seventh consecutive session. So here the picture is slightly on a positive side. We are looking at more sort of buying interest coming in the broader market. But index, no doubt, we are witnessing some consolidation. But I believe that once this consolidation gets over, we'll see Nifty breaking above its immediate resistance of 24,800 and moving beyond 25,000 as well. So as far as December series is concerned, the outlook is still looking on a positive side with the buy and decline approach till the time Nifty doesn't break below 24,400. I think any dip should be used as a buying opportunity. And if you see the volatility index India week, since the major events are out of the way, the weeks have witnessed a cool off, and currently it is trading near about 14. So that is providing more comfort to the bulls. Any further drop from here will definitely help index to pull on the upside. So overall, bias looks positive. Broader markets are looking attractive. The benchmark indices, we expect some consolidation to continue. But once this consolidation gets over, we expect another leg on the upside.
Okay, expect more upside once the consolidation phase is out of the way. But before I move on to the stocks that are on my radar, I want to ask you about HDFC Bank. The journey from 1800, once it was crossed, to 1880, which is the fresh 52-week high that it hit today, was very swift. What are you watching out for in terms of target on HDFC Bank for the next 2 to 3 weeks?
See, Nanta, this particular counter has been one of the outperformer, and we have seen Bank Nifty outperforming the Nifty index as well on the back of a big move that we have seen in the HDFC Bank counter. And since we have already witnessed a good breakout above 1800, the target of this breakout comes somewhere around 1950 to 2000. So these are the position target. I think the structure is looking strong. And if at all, if somebody is already holding the long position in this particular stock, I would advise to stay put, keep a trailing stop loss below 1800, and on the upside target comes around 1950 to 2000. But ideally for a fresh entry, one should wait for some dip towards 1840 to 1800. That could be a good entry point. Since we have already seen a good spurt, so better to wait for some meaningful dip to get into this particular counter. But yes, targets are very much intact, 1950 to 2000. Maybe in next 1.5 months, we might see this particular stock moving towards 2000 mark as well.
All right, 2000 in the next 1 month or so. Well, that bodes well for HDFC Bank. But that one stock that's on my radar, the first one, is of course from the FMCG basket, Godrej Consumer. The stock ended the day lower by somewhere around 9% or so. At one point, it was down over 10% or so during the day. But of course, there was a surprise mid-quarter update, that took the market by surprise, of course, but also triggered a very sharp sell-off. across the entire FMCG basket, and drag down stocks like HUL, Tata Consumer, Nestle, Marico, what have you. Given the fact that, of course, the update that has come in has signaled slowdown blues. Of course, from the second quarter, the trend that had emerged was a slowdown in urban consumption demand, and that was evident with the kind of volume growth that was handed in by the likes of HUL, players who are more tilted towards urban consumption. Now, for GCPL, for the third quarter, they've said that they are expecting a sharp decline in margin going forward. Volumes are also likely to be flat in mid-single digit. Sales growth is expected in the third quarter. Demand conditions, however, remain subdued, and it is expected to continue for the next few months as well. But for the past few months, the weakness in demand was pretty much evident in the economy. Now, portfolio wise, soap portfolio was impacted by a surge in palm oil prices. Household insecticides portfolio was also impacted by delayed winter in North India. But the company has said that it will be focused on long-term growth through media spending and rural distribution. A lot of these brokerage houses, have cut their target price on the stock, but most of them have also maintained their faith in the company. For instance, Jeffries, it has maintained its buy rating on the stock. Target price is at 1550 rupees per share. Which still implies a 25% upside from yesterday's close price. In fact, Friday's close price, to be precise. Projection, however, they have mentioned that it is likely the kind of estimates or projection that the company has given for the third quarter is likely to add to investor concerns. Aside of that, you have UBS Securities. It says that although soap and household insecticide, portfolios will witness weakness, rest of the portfolio is expected to see double-digit volume growth. So, which is why they have maintained a buy rating, the target price of 1450 rupees per share. Goldman Sachs has also kept the faith in the stock. They have a buy rating. Target price is at 1375 rupees per share. But MK Global has downgraded the stock to reduce from ad. They've cut the target price as well by well over 10% to 1225 rupees per share to factor in the near term stress. Of course, if you look at the charts for Godrej Consumer, it has been under pressure. And in fact, in the last 3 months itself, it has lost in excess of 20% or so. Nilesh, given the fact that there was complete risk off when it comes to the entire FMCG pack, and this one concern, the nagging concern, has been the slowdown in urban consumption demand. Till now, when rural wasn't really firing up, urban demand was powering growth for FMCG firms. But now, although rural recovery is taking place, it is yet to translate into full blown recovery. Urban has slowed down, which is why we have seen FMCG names come under pressure. But given the kind of risk off that we saw in the stocks today, what would you do with names like Godrej Consumer after a 9% cut? Even the likes of HUL, Tata Consumer, all of them were under intense selling pressure today. How does the week, in fact, the coming months look like for some of these FMCG names, and what should one do?
So Naita, first we need to understand the where the overall setup is moving. If you see past 4-5 months, this particular Nifty FMCG index has have been forming a low top and low bottom formation. So which means that whatever pullback in between that we saw has been sold into. Now today as well, we have seen a breakdown in Godrej Consumer Product, HUL, Dabur. In fact, all these FMCG names have the chart looks like distorted, and we might see another leg on the lower side. So I don't see any immediate rebound and recovery in this particular sector. The overall structure looks slightly on a negative side from a short to medium term point of view. So it is better to stay away for the time being taking any contra bet. As far as Godrej Consumer Product is concerned, 1100 is the immediate support. That was the level that we saw in the month of April 24, and from those levels we saw a strong rebound. But now, since today we saw a big gap down opening, the stock retested those 1100 mark. So it is important to see whether this particular counter hold on to that particular level. If at all it slips below the same, then we might see a further pullback in this particular sector. But now, since today we saw a big gap down opening, the stock retested those 1100 mark. So it is important to see whether this particular counter hold on to that particular level. If at all it slips below the same, then we might see a further pullback in this particular sector.
But what was on a roll today was the tire stocks, right? Of course, that was on the back of an acquisition made by Seat, which is why even stocks like JK Tire were up and about today. Seat, of course, ended the day higher by about 8% or thereabouts, but at one point of time it was up in excess of 10%, and in fact it did hit a fresh 52-week high today as well. But the company has bought off-highway tires and tracks business Camso brand from Michelin. The deal is valued at $225 million and is said to be completed within the next 6 to 9 months. Now, with this acquisition, the company will gain global ownership of this Camso brand after an initial 3-year licensing period. The move will also broaden the product offering into construction tires. Acquisition also aligns with the company's strategy to expand off higher tire segment, which is seen as a high margin business. Now, this segment already includes over 900 products for Seat. Now, Camso brand holds strong equity in Europe as well as North America, so it will broaden the horizon as well for Seat. Now, Seat management was on CNBC TV 18 today, and they said that this acquisition will give them an entry into premium segment as well. And higher end segment normally has higher margin, which is why I said it will be a higher margin business. Although the management also pointed out that for the second half, maybe margins may be slightly impacted, but in the long term, it will be a margin accretive acquisition, and it will translate into 14 to 15% kind of ROEs as well. Now, the synergy from acquisition of this particular brand, Camso brand, is very high according to the management, and they can enter into many categories after 3-year licensing period is over. And the larger impact from the acquisition will be seen from 2026. And of course, some uptick in margin can be expected due to the new acquisition as well. And 25% of the business will be in higher margin off highway truck segment. So yes, this acquisition bodes well for Seat. Management is very confident, and they've said that the investment that will accrue for this acquisition will be somewhere around 1,900 crore rupees, and it will give them access to a lot of other things like amenities as well. Uh, and it will be kind of more than just setting up a plant. It will be access to a lot of other technologies and things that come with a well established brand like Camso. The stock, of course, up 36% on a YTD basis. Nilesh, although the stock has hit a fresh 52-week high today of 3,578 or thereabouts, do you see this move that we saw today as a fresh breakout?
So, Nita, if you ask about overall, all the auto ancillary space as a whole is looking positive. Today, we have seen buying across the board, specifically tire space. If you pull up any tire counter, today we have witnessed a good momentum, good move, and a spurt. So, out of all, definitely Seat has been one of the outperformer. It has hit a new record high today, but the structure still looks strong. Today, we have seen a good volume participation with a good breakout and a gap up opening. So overall, the structure is hinting that the stock is poised for another move towards 3,600 to 3,800, but it's not advisable to chase this particular move because it was already up close to 8% today. So better to wait for some cool off towards 3,100, 3,200. That could be a good entry point in Seat. But the overall outlook looks positive, and 3,600, 3,800 could be seen in the very short run. Stop loss should be placed below 3,100. And apart from that, within our tire space, Apollo Tire is another stock that is looking quite promising at current level. And we have seen a strong rebound from the levels of 450. So stock has a potential to test 570, 580 on the upside. One can keep a stop loss below 525, and Apollo Tire can be added on declines.
Okay, Apollo Tires, the preferred one, which can be added on declines. But another pocket that was under pressure was the entire CDMO basket. Stocks like Divi's, Newland Labs, Piramal Pharma, Laurus Labs. These are some of the stocks that were under pressure. There was a trigger here, of course. The U.S. Buy Secure Act is still awaiting approval. It was kept out of a key defense bill, which marked a win for Chinese biotech firms, so to say. Now, a failure to pass this bill this year will have a sentimentally negative impact on the Indian CDMO companies, the ones that I just mentioned. Now, US House of Representatives had passed the Biosecure Act by an overwhelming majority in September, which is when we saw a very good rally coming in on these stocks. And because this bill or this act, it will prevent US drug companies from doing business with certain Chinese biotech firms. So this bill was passed, was in fact meant to be passed by the US Senate. And once this was passed, or this would be passed, it would tilt the scales in favor of Indian firms like the ones that I mentioned, Newland, Laurus, Divi's, Piramal. But if approval doesn't come by in 2024, there could be a whole new process that could be coming in, and that could lead to further delay in approval. And of course, that means the wait for these CDMO companies to get contracts from US biotech firms will only get longer, which is why we saw the likes of Divi's, Newland, Piramal Pharma under pressure. Anything on the charts? Any kind of a trend that you are spotting on the charts of these stocks? Divi's, Newland, Piramal, anything that's catching your fancy?
All these three stocks, in fact, are witnessing some amount of consolidation. I won't say that the structure is looking negative, but it's more sort of a consolidation. But if you talk about overall Nifty Pharma Pack as a whole, if you see Nifty Pharma Index, which is currently trading near about 22,300, it is likely to oscillate in the range of 21,800 to 23,800. So that's the broader 1,000 point trading range. But one needs to focus on stock specific action within Pharma Pack, within hospital space. So we are liking Dr. Reddy within Pharma Pack, where we are witnessing a strong rebound from the lower levels. Today as well, we have seen an uptick in this particular counter. So Dr. Reddy looks positive for 1280, 1300 kind of upside. Stop loss can be placed below 1220. And within hospital space, laboratory space, Lal Path Lab, this particular stock is also looking attractive. It has formed a good base formation near about 3000, 2900 zone. So looks positive for 3200 to 3250 on the upside. One can keep a stop loss below 3100. And yes, Dr. Lal Path Lab can be bought.
All right, those were the names from the pharma pack that are looking interesting at the current juncture. But one stock that has rallied in excess of 30% in the last 5 sessions is HEG. Uh, would you take a trade here, or would you say the risk reward is looking pretty unfavorable after this kind of a move?
So HEG Graphite, this particular space as a whole have witnessed a good breakout in the previous week, and this week has started with a follow-up move. So yes, there can be a trade initiated in HEG and Graphite both. So HEG looks like it is heading towards 630 to 650 kind of levels on the upside. It has a very strong support near about 560. So ideally, one should keep a stop loss below 560. But I would advise to wait for some dip towards 580 to 575. That can be a good entry point. Keeping a stop loss below 560, this particular stock can be bought for the upside target of 620 to 640. And also Graphite, since it is trading near about its support zone of 550, so for similar target, Graphite can be initiated the long position for 600 kind of target on the upside. So just to play this momentum, these two stocks are looking positive.
All right. Another pocket, the exchange stocks. Look at BSC, MCX. Not only have they been upbeat in the last 5 sessions, but if you look at what they've done on a YTD basis, both the stocks have been multi-baggers. Both have more than doubled. Here on, how should one approach these stocks?
So Nanta, in fact, if you see this particular space, as you rightly mentioned, rightly pointed out that these particular stocks have been one of the outperformer, and I would say a multi-bagger kind of return we have seen in BSC specifically. So at current level, it's not advisable to chase the momentum because the risk and reward is not favorable. But if somebody is already holding the long position, I would advise to stay put for the upside target of 5,800 to 6,000 as well. It's a good SIP kind of a stock where any dip can be used as a buying opportunity, can be added on multiple tranches. So it has a support near about 5,000 zone. So better to wait for some dip towards 550, 200 to 5,100. But yes, the undertone still looks strong for 5,800 to 6,000 kind of levels on the upside. Apart from that, MCX, yes, this stock also has a positive structure, and it is also trading near about 7,000 kind of levels. Today it has tested. So it has a potential to test 7,300 to 7,400 from a near-term point of view. One can keep a stop loss below 6,500, and yes, can be bought on declines. But not only exchange stocks, Even if you see broking stocks like Angel One, Motilal Oswal, so this space is also buzzing. So both the stocks, in fact, are looking strong on the chart.
All right, looking strong on the charts, and 6,000 can't be ruled out on a BSC. Before I let you go, Nilesh, any stock that you would be keeping on your radar for the rest of the week? Any recommendation for viewers?
Right. So we are tracking the banking space specifically. We expect an outperformance to continue within the banking space. We have already discussed about HDFC Bank, but Kotak Mahindra Bank is also looking strong. Today, it has given a close near about its 200-day exponential moving average as well as 50 DMA. So both are coming exactly near about 1780 levels. So a good close. We can expect a follow-up move towards 1800 to 1850 in Kotak Bank can be bought, keeping a stop loss below 1760. And apart from that, another stock within realty space, DLF is looking positive for a move towards 880, 890, and the stop loss can be placed below 850. So yes, DLF, Kotak Bank, these are the two stocks which are looking positive.
All right, DLF and Kotak Bank recommendations from Nilesh. With that, Nilesh, would like to thank you for taking out time and joining us this afternoon. Always a pleasure chatting, and I look forward to interacting again with you soon.
Thank you, Nanta.
Well, on that note, of course, we have ended the session on a subdued note, 24,600, although we've managed to sustain that level on the index. Whether or not we manage to stage a good comeback tomorrow or for the rest of the week and make a dash at the 24,800 level, that was, one of the swing highs that was crossed last week, something that we'll be watching out for. But of course, for now, it's a good bye from me. Thanks a lot for tuning in. Have a great evening and come back and join us tomorrow morning at 9 a.m. on opening bell. Stay tuned to Money Control. Till then, for all your